let me introduce our guest. He had me on his podcast, and so I've asked him to come on and talk about his program. He comes from the Great White North, where the only thing that comes from Canada is comedians, cold weather, and podcasts. Because they got nothing else to do up there in Canada. So Dave Dubeau, that's French for of the beauty. Don't tell me I'm wrong.
That's what they tell me. So I just
trust me. I took French. I'm from Nashua, New Hampshire. Everything is like French Canadian there. So I'm like practically I fit right in.
Nice.
Don't even get me started. Like, I couldn't find my shoes, so I go up to the closet, and there they are, gone. I wore 2 eggs.
I come from the other side of the country, man. But so
where'd you come from?
That accent so much over here, but
you don't. That's right. You don't. Where'd you come from, Dave?
British Columbia.
Well, that's that. Yeah, that's the other side. That's the west side.
Yeah, that's the west side. Yeah.
Yeah. Okay. All right. There. All right. So, David, listen. Dave had me on his podcast. He had a very unique program that I was only on for 20 minutes. I was like, my podcast would go as long as we need to. Dave's are very cut and dry. Boom, 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 and then you're off. So, David, let's. But what we're going to be talking about now with David is attracting investors. Okay, this is something, and I'll tell you, I thought this was a great topic to discuss, especially in light of this new business building program that I'm putting together, which also ties in to how to attract investors and have them ready to go when you need them. And that's part of the problem with when you're setting up your multifamily business is you wait too long to do that. And by the time you need it, it's not ready to go. So what we're going to be doing with the new program is getting all your ducks in a row before you need them. And so, David, welcome to the Monday Night Live Owner Forum call. How are you?
I am fantastic. Thanks very much for having me on, Charles. This is a treat, and looks like you got a good batch of active investors on the call. So,
you must be looking at the wrong group. You're like, I'm kidding.
I'm here to go over whatever you'd like to do.
Okay, so let's talk about. You've got a free book that you could get out to everybody. You've got, your focus is on raising the money, finding money partners. You've got to try to get it down to a system. Talk to us about this, and as you talk, you'll see questions come up in the chat box. I'll add them in as we go, and then I will be peppering you with questions as well.
Says the money partner permit. Well, thanks very much, Charles. So again, you guys just because you don't know me yet, my whole focus is I am a real estate entrepreneur, a marketer at heart, and for the last 5 or 6 years, my main focus has been on applying marketing to finding investors and raising capital for our deals. So I also invest in multifamily properties. I realized a long time ago I'm much better at the marketing and the shaking the tree than dealing with tenants and toilets. So I partner up with people that are better at that, and I help raise the money, and I get a piece of the equity in the deals is basically what I do these days. And then I also help other folks just like you guys find investors, raise capital for their deals, because I don't know, Charles, have you seen this? It's quite often people get to a point where they run out of cash and or credit to build their portfolio, and they kind of get stuck. I don't know. Has that happened to any of your guys?
Well, that actually happened to me on the first deal. The second deal I did. The first deal I did, we used friends and family money, and then the bank came along and said, "Hey, you want to buy the property across the street?" And I said, "Well, I'm all out of friends and I'm all out of family, so I don't have. I'm tapped." And they were so kind enough to let me purchase it with 100% financing.
Nice.
Well, not really, because if you listen to my story, when you go no money down, 100% seller financing, sometimes there's a reason why the seller's willing to give you 100% financing. So
makes sense.
Buyer beware. Yeah.
Fair enough. And then the other thing I found, Charles, is a lot of what's out there as far as finding investors, raising capital, really works well for people that are naturally salesy. People that can pick up the phone and start dialing for dollars, people that can get out there and start glad handing and schmoozing and turning every conversation into a real estate conversation. There's nothing wrong with that. But what I found, or maybe it's us Canadians or a shire batch, but it's just a lot of people don't really like doing that. They're not naturally good at it. They're a little bit on the shy side. So basically, what I did is I applied marketing principles to finding investors and raising capital. So I kind of twisted things around. Instead of what can I do instead of chasing after people, how can I arrange things so they actually come to me instead of me always running after them? Does that make sense?
Yep. What you're telling me is that you're saying that multifamily investing is a sales and marketing business.
It definitely is. It definitely, and raising capital is a marketing business. It's the same thing. This is a component of the multifamily business. You got to get the capital, you got to get the cash, you got to get the credit to do your deals, right? So this is part and parcel with the whole thing. So again, what I found quite often, Charles, is people are getting started just like you did back in the day with friends and family, but they aren't quite sure how to do it. They aren't quite sure how to bring up the whole investing thing without coming across like they're desperate for the money. They're worried about wrecking their relationships with their friend and family. They're just very, very nervous about that. The other mistake I see people making is they just run out and they start trying to raise money from everybody and anybody. In other words, the public. And I don't know about it. Actually, I do know in the States. Here in Canada, it's pretty rough if you're doing that because you're crossing the line with what we call the Securities Commission up here. I believe it's called the Federal Trade Commission in your neck of the woods.
No. It's not the Federal Trade Commission. It's called the SEC, the Securities and Exchange Commission.
Well, there you go. So
Yeah.
we got you. And I don't think they're that friendly, right? I could be wrong.
Nope. Personal experience. They are some of the worst people I've ever had to deal with.
Yeah, well, they've got their counterparts up here up north as well. So we don't like them, and we don't want to cross the line. And a lot of uneducated real estate investors, when they're trying to raise capital, they unknowingly cross the line and they start trying to raise money from Joe Public, and that can get them into a whole world of hurt. So what we want to do is we want to avoid that, because I don't think anybody really wants to get fined or go to jail. And we want to find an easier way to go about it. So that's when I came up with this kind of 5-step process. I tweaked it. I worked on it myself. When I first started dialing this in, I was focusing on doing smaller deals, so lease options, rent-to-own deals. And then I since worked up and started getting into multifamilies. So myself with this, I've raised millions of bucks for my own deals. At this point, it's actually about 4.5 million. But more importantly, with my clients and students and whatnot, they've raised in the hundreds of millions of dollars following this process. So I think it might work pretty well for your guys too.
All right, so let's go through these steps, because I think they look so easy, obviously. But let's, first thing you're gonna do, gather, filter, and reconnect.
Yeah. So our whole goal here is to figure out who are we going to go after? Who are we going to have as our target group of prospective investors? Basically to keep out of trouble with the securities, and second of all, to simplify our lives and have a target to shoot for. So what I suggest is that we come up with a group of approximately 200 people that we're going to go after. 200 people that we already have a pre-existing relationship with. So friends, family members, co-workers. If you're self-employed, it could be past and current employees, or even clients or customers in some respects. People that we have, people who know us and who we know. Does that make sense?
Yeah. Okay. Let me ask you. Let me go right through some of these things. Yeah. Sift, sort, and filter. Mm-hmm. So, how do you filter these people? What type of parameters do you set up to talk to these people?
Okay. So, first thing is we have to come up with the list of these couple hundred people.
Okay.
Right. So everybody kind of freaks out about that, and they say, "I don't know 200 people, Dave. What are you talking about? There's no way." I'm going to suggest, yeah, you probably do. So what we do, Charles, is we start people off with your cell phone. And you guys, if you want to play along, you can go ahead and do this. If you just go to your cell phone and you go to your contacts and you scroll to the bottom of the list, that'll show you how many contacts you have on your phone. Do the same thing with your email addresses, same thing with your social media, your Facebook, your LinkedIn. Get all the people out of those places, export them, get them into one spot, an Excel spreadsheet, right? Get it all in there. If you don't know how to do that, you can YouTube it. And it'll show you. Get them all in one spot, and then that's where your question comes in, Charles. How do how do we determine who's in that group of 200? So we start with 1,000 or 1,500 or whatever it is, and then we filter down to 200, which makes your life so much easier. All right? So you get that big list, and then here's what we do for the first pass through. First pass through, I take a look at the name. If a face pops into my head and I have a generally positive feeling about that person, I'll keep them on the list. Okay? If I see a name but a face doesn't pop into my mind, or the face that pops into my mind is somebody that I'd rather punch in the face, then I delete them. I take them off the list. Does that make sense?
Yeah. Oh, okay. Now let's just see people playing along. Everybody type in, because I just did. I didn't know it told you how many contacts you had at the bottom. So everybody type in how many contacts they have in their cell phone.
It's not a competition, you guys, so don't feel bad.
No, it is. We're American, Dave. Everything's a competition. See, you Canadian stuff, you guys.
But you're a well-connected guy, so I mean, give me a break. Smart.
So, okay, but now that you get these people on there, so what I'm trying to figure out is, what I call it is understanding the flavor of someone's money.
Yeah.
And, knowing who wants long-term, short-term, who wants risky deals, non-risky deals, those types of things.
We aren't quite there yet, Charles.
Oh, okay, good.
We're not quite there yet. So here's the big mistake I see a lot of people doing is they prejudge the people on the list.
Absolutely.
You know what? So-and-so's got money, so-and-so doesn't have money. And what I've found is that quite often the people that are all flash ain't got no cash, and the ones that do have the cash, they don't like to flash it, right? So it's kind of like the millionaire next door. And you never know who's got their house free and clear, who's got a whole schwack of money in their 401ks, et cetera, right? So we don't want to prejudge. So bottom line, we come up with that list of a couple of hundred people, and here's the truth for most of you guys. Chances are you don't need that many investors to get going, right? Especially if you got parameters. If you want to have a minimum investment amount of, let's say, $75,000 or $100,000, which I would highly recommend, then you probably don't need that many to get into your next deal. The challenge is we don't know out of those 200 or 300 people or however many you got on your list, which ones, A, have the money and which ones are going to invest the money with us yet. Okay? Now, Charles, here's what I'm going to share with you guys so they don't make the same dumbass mistake I did when I started doing this. And I remember it vividly. I had this deal on the go, and I'd self-financed my first couple of deals, ran out of cash. I'd heard this bullshit, just find the deal and the money will find you. Yeah. So if anybody ever has heard that load of crap in the real estate circles, go ahead and you can type that in just so I know I'm not the only one that heard that and drank from that fountain. Anyhow, I found the great deal. And I didn't have the money, and bottom line, desperately scrambled around. And one of the ideas I had was, okay, well, let's come up with this list of people and shake the tree and see who's interested. So I came up with my list of a couple hundred people, and I thought, hey, I'll send everybody an email and see who's interested. So that's what I did. And I got kind of excited because I started getting a bunch of replies back until I started reading the replies. And the replies basically said, hey, Dave, haven't heard from you in 15 years. And now the first thing you're doing is you're trying to hit me up for cash for a deal. Bugger off. That's a Canadian expression in case you haven't heard it before, Charles.
Yeah, we call it something else. You guys are so polite up there in Canada.
Yeah, well, they said it. A few of them said it a little less politely.
Yeah, exactly.
That's the gist. So bottom line, we don't want you guys doing that. So you guys, I'm going to show you what to do instead, okay? And this works like gangbusters. So we send out a couple of emails that are not businessy first. We try to reconnect with everybody on a personal level before we start talking business. So that's the whole reconnect part of this, Charles.
Okay.
And that is the first thing we send out is what I call the Christmas letter from Aunt Nadine. And Charles, you're a young fella, but you might still remember this. Back in the day before the interweb and cheap long distance, and when people used to actually write letters, remember that?
Yeah.
I had an aunt, her name was Aunt Nadine, and she used to write us a Christmas letter every year. photocopy it, put it in the Christmas card, send one out to all of our family members. Did you have anybody like that in your family?
Yeah, yeah, we love those people because their lives are always so perfect. Because all they do is tell us all the great things that what happened that year. That's why the Dobbins family never sent a letter out like that.
It's kind of like social media these days, right?
Yep.
Same idea.
Oh, yeah.
So anyhow, but it's kind of cool because we didn't talk on the phone. We didn't see him very often. So we got kind of caught up with the family that way. So we want to do a version of this, modern day version of this. And what I suggest to do is you catch people up on what you and the family have been up to for the last 4 or 5 years, right? And not just the perfect stuff. You can also talk a little bit about the not so great stuff. Just don't dwell on it. Not too long. You don't want to do a whole long essay, but if you printed this thing out, it'd be about a page, maybe 2 pages of what you and the family are up to, the kids' names, the dog, if you move to a new house, if you got a day job, what you're doing, just the normal human interaction. Like you bumped into somebody in Starbucks and had a very one-sided conversation about what you've been up to. Does that make sense?
Yep, absolutely.
At the end of the email, you say, hey, well, that's what I've been doing. How about you? Please click reply and let me know how you're doing. I'd love to catch up. We send this off to all 200 people. And you can do this easily with an email autoresponder, you guys. You don't have to type these out individually and send them out individually. You can do one and be done with an email autoresponder. Okay? Then the important part here, Charles, is when you get people contacting you back, make sure that you actually do have a little back and forth with them and really have a legitimate reconnection, right? Because that's where the money really is. That's what I found anyhow. The people that get back to you, the people that you have that reconnection with, much higher likelihood of shaking the tree with them and them having some money. All right? Second step, we send out another message 3 or 4 days later, similar, but this time I suggest you a video message, right? Now,
okay, now who do you use for your video message?
I use Mr. YouTube.
Oh, okay, that's all. Okay, all right, that's good.
So here's how you do your video message. You film yourself on your laptop or on your cell phone. Again, short little video, basically just a video version of what you said in the first message. Hey, it's Dave here. I thought I'd try something different, shoot you a little video, just catch you up on what I've been up to, blah, 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 blah. That's what I've been up to. Love to hear back from you. How are you doing? You don't have to do a video, but just hit reply to this email and let's catch up. All right? Send that sucker out. Now, why do you think I suggest everybody does video?
Because video sells. And if you get it on YouTube now, I mean, that obviously it's got that SEO feature where if you allow people to see that channel, they're going to see what you're talking about. So it's going to broaden your base automatically.
Yeah, and actually, I suggest people don't do that, Charles, because again, we want to stay under the radar with the security.
Yep,
right?
yep.
So
I agree.
Or like an unlisted video. Not that we're doing anything we haven't even started talking about money yet.
Right.
Right? But we send that out. Again, the next best thing to being there face to face with the person. That's what I found. It's the next best thing. Right? So it gets, yeah, exactly. Connecting the face and name. And a lot of people are nervous about this. I always say, hey, you know what? Time marches on for all of us. It's, because people say, well, Dave, I'm a little chubbier than I was 15 years ago. I'm a little grayer. I'm a little balder, a little wrinklier, whatever. Well, time marches on for everybody, and they're going to really love seeing you and hearing you and seeing your facial expressions. So just send that out, and you'll be surprised. You'll be very pleasantly surprised at all of the communication that comes from this. So again, get back to people, have that genuine reconnection. And then 3 or 4 days after that, here's where we kind of give them the heads up that we're going to start switching gears and talking business. So this is the transition message. Again, I suggest a video. It'd be something like this, very short and sweet. Hey there, it's Dave. It's been good reconnecting with you over the last week or so. Just want to let you know that moving ahead, I plan on doing a much better job of staying in touch, letting you know what I'm up to with real estate. Real estate's something I'm very, very passionate about. In fact, I've been doing really well with it with multifamily investing. And I think it's the best way for everyday people like you and I to get an above average return on our money backed by a solid asset. And that's a real piece of property. And who knows, maybe sometime in the future, you might even want to partner up with me and share in the profits on a deal. But you know what? If you're not interested in real estate, that's okay too. You can always click on the unsubscribe button at the bottom of any of my emails. You'll be taken off my list immediately. In the meantime, if you haven't had a chance, please hit reply to this. Let's catch up. I'd love to find out how you're doing. Take care. God bless. Talk to you later. Send that sucker up. Now, that does a lot of things. That lets them know that A, you're going to be doing a better job of staying in touch, otherwise known as marketing. B, you're going to be talking to them about real estate. C, real estate is something you're really excited about. You're doing really well with it, and you think that they can do well with it too. D, hint, hint, nudge, nudge. They might even want to partner with you in a deal and share in the profits, right? But then we do something counterintuitive, and that is I encourage people to opt out if they'd rather not hear. Now, can we do a quick little poll with your folks here, Charles?
Go ahead.
So we got 200 people on our list. We're sending that email to them, and we're telling them to opt out if they're not interested in real estate. How many do you think will opt out?
Very, very little.
Oh, you weren't supposed to chime in there, Charles.
Well, no, but I haven't looked at. They're going to run right over me. 15, 10. I think those numbers are too high. Melody's right. It's now it's personal. Now, like they're getting an update from you.
Right.
They're getting on whatever her name was, one of her letters all the time now.
It's true. Very, very few actually opt out. And when I ask people this at a live event, they say, 80, 90% are going to opt out. I said, there's no way. What we find is out of 200 people between all three of these messages, usually between 6 and 12 people opt out.
Yeah.
That's about it. So, 3 to 6% kind of thing. Very, very low. So it works very well. So that's how we kind of set the stage. Now we got our target group that we're going after. We've broken the ice. We've reconnected with them. We've kind of, in a certain way, kind of got their permission to start talking business. And you know what's kind of funny, Charles? Out of that warm-up campaign, it's not designed to start raising capital, but I've seen that more often than not, well, I shouldn't say more, about half the time, people actually start getting people on their list reaching out to them saying, "Hey, Charles, what's this real estate thing you're up to? What do you mean you're doing multifamily? What's that all about?" Bang! That leads into setting up a meeting and having a presentation. Does that make sense?
I got to tell you, everything, right now, all we've been doing is on step one. And the thing is that everything that you said in step one was exactly how my wife and I started our business, raising private money, everything with reaching out to people, reconnecting, talking about what we're doing and building, creating that, talking to them on the phone. They can pick up the phone and call us, and that's the reply button, so to speak. So everything that you said right now is spot on. For what we did.
Nice.
Yeah.
And that's probably part of the reason why you had so much success as well.
I'll tell you, it made the business so much easier, and for finding private money, because that first one we was $350,000, and then 3 deals later it was almost $2.5 million we raised, and it was all because we had built up the infrastructure beforehand.
Yeah, and you start that, you stay in touch with them, and it just keeps going. In fact, I just had some new clients reach out to me a couple of days ago, and they were excited because they just raised $900,000 in the last 4 weeks.
Yeah,
just getting.
Yeah, it's a great feeling.
It's amazing. It's amazing. Yep. All right, we good to go on to step 2?
Yes, and keep in mind too, I run my calls just like you run your podcast. You got 1 hour, right? 8 o'clock. We call it a night.
No problem. We can go a little faster now. Okay.
Yeah.
So step number 2 is, now when people start putting up their hands, say, Charles, I'm interested. Tell me more about the deal. You need, you come from a very successful sales background. Most people don't. I think you understand that, right? So they don't know the first thing about presenting or doing a meeting with somebody. That's not most people's wheelhouses. So what we do is, what I found has worked best for normal people is having a well-structured, well-put-together slideshow presentation. Something where you can bring your laptop along with you, pop it up, and then go through a presentation that keeps you on track. It's a lot more visually interesting for the other person. And most important, you don't forget the most important parts. That's what I found the big advantage for.
Let me just interrupt here and say to everyone, it's amazing what Dave's talking about, and I just got done giving you an update on the business building program. But one of the modules within the business building program is pretty much exactly what Dave's talking about, and it will have a template PowerPoint presentation for why multifamily.
Nice.
Just what he's talking about here, because everybody's going to need it. So let's get this. Yeah, perfect.
Exactly. So that's such a huge benefit that you're providing there. So again, what I found has worked, and again, not just for me, but for all of our clients, is having it in the right order. So making sure that you're getting a lot of information from the prospective investor, what their goals are, what their risk tolerance is, what they're looking for, making sure that what I'm offering them fits what they're looking for, but that they also fit into my parameters as an investor. This is counterintuitive. When people haven't raised capital before, they think, anybody with a pulse and a checkbook is a good prospective investor. And that's not the case. You want to make sure, at least my thinking is, I want to make sure that they fit into what I'm looking for just as much as I fit into what they're looking for. All right. So well-designed slideshow presentation. And the nice thing about this nowadays, Charles, is we can use these presentations one-on-one with, meetings at a person's home or a coffee shop or what have you, or you jump on Zoom and do exactly what I'm doing right now. You can see the other person. It's the next best thing to be in there, and you can go through the whole presentation live on Zoom. Okay, you can do it one-on-one or small groups as well. So that's step number 2. Step number 3, now that we know who our target group is, we've broken the ice with them, we got our presentation all ready to go, now it's time to kick up the marketing. And marketing is the little engine that could for all things business. Definitely true for your real estate investing business. So when it comes to our raising capital marketing, what I suggest to everybody is you start with one thing and do it consistently. Start with one thing and do it consistently. Then you can add on more stuff after that if you want. But get that flagship, what we call flagship communication, get that going. And again, my favorite thing is video. And it's not just because I'm so damn good looking, Charles, but it's because...
That's definitely another reason, dude. That's definitely another reason. See, when you take control of the screen, I only get to look at Brendan Chisholm and Richard Bardnelli, and these guys are they're a tough audience. They're not even laughing at my jokes. So, this is, I can't tell what other
That's
people...
because they're being polite. They're taking notes, all right?
Yeah, so unlike them, though. They're never this polite.
So we start with one marketing strategy, one tactic, do it consistently. Videos, I like video logs. So if you're not familiar with what a video log is, typically it's like a 3 to 5 minute long little video lesson about something to do with what you're doing with real estate. So,
hey, let me just say that I do a vlog. We call them vlogs here in the States. We're a lot more hip than you guys are. And I do a vlog every Saturday, and Deb gets it out. As a matter of fact, it's taken predominantly from this call. She grabs 6 to 8 minutes of it, and it goes out every single Saturday. You would not believe the responses I get back from that. People love it, and it's amazing. Except Deb has now changed it, because there's usually a time in one of these calls when I start to badmouth brokers, and then Deb grabs that clip and then sends it out to the world, and oh man, you would not believe some of the emails I get.
Yeah, all sorts of responses. I'm sure you get.
Yeah, it's bad. It's bad.
So what I suggest people do is you actually batch these things up, because most people aren't doing these kind of training things. They're just doing their own thing. So come up with a theme. And then crank out a bunch of video logs, like take a Saturday morning and crank out 5, 8, 10, 12 video logs, so you can set them up and set them and forget it, and you don't have to worry about it again, right? So pick a theme. So it could be, like you're talking about, the big benefits of multifamily investing. Why multifamily investing versus everything and anything else out there? And I'm sure you could come up with the top 10 reasons pretty quickly or more. It could be why you like to invest in your particular market. It could be even something as general as why real estate versus everything and anything else out there investment-wise. That's a pretty easy one. It could be, compare and contrast real estate to the stock market. It could be, the 7 or however you count it, the 7 or 8 different profit centers in a real estate investment deal. And then you don't do all 8 in one video log. You do one video log for each profit center.
Mm-hmm.
Right? 3 to 5 minutes. Now, here's the other important thing that I had to learn the hard way, Charles, is we always have to remember that the people that are watching our video logs are not real estate freakoids like us. They're
That's huge. That is so huge. You walk in there and you're going to start talking cap rate with them, and they're just going to be blown away. Like, whoa. That is. You've got to bring these people along in that sales pitch.
Yeah, and it's more educational. I'm not even all that pitchy on this kind of stuff. It's educational, and more important, they don't really even want to learn about real estate, but what they want to know is that you know what the hell you're talking about. You know what you're doing. So if and when they invest with you, it's in good hands. Does that make sense?
Yep.
That's what it's all about.
Yeah.
And the whole thing, I'm all about educational marketing versus bashing them over the head with sales messages. Now, here's the reason, Charles, is what I found is if you have to sell somebody on investing with you, you have to convince somebody, if you have to strong arm somebody or manipulate somebody into investing their money with you, that person is going to become a nightmare investor.
Okay. Let's stress this. This is huge. I mean, if anybody before the deal closes wants their money back, give them their money back. You don't want that person in the deal. And that's the thing about this. When you do a multifamily deal, these investors are your friends. They're your partners in this thing, and you've got to make sure that you can get along with them, and you've got some good people on board. We had some great people in our deals, but that's the thing is you don't. And if you start going out looking for money with people you don't know, you never know what you're going to get.
Yeah, exactly. Very, very well said. So you got to be careful of that. So that's the thing, that constant, consistent communication, that drip that's coming out from you on a regular basis, where ideally at least once a week, but at least when you get started, you guys shoot for at least once a month so they don't forget about you, right? And then work up to once a week. Then if you want to do other stuff, you want to do electronic newsletters, if you want to do this or that and the other thing, you can add that on. Webinars, very, very effective. That's been my secret weapon for raising capital fast, is doing a group online presentation. Works like gangbusters. But that's basically step number 3. Step number 4 is being seen as a credible real estate authority. Now, this is a lot easier than most people think it is, because I don't know in the States, but here in Canada, the stats are that 95% of Canadians have never invested in a revenue property. Okay, their own house doesn't count, but 95% of people have never invested in a revenue property. So if you've even got one deal under your belt, you're ahead of 90 to 95% of the people that you know outside of the real estate clubs, right? Normal human beings. So it's pretty easy to demonstrate your expertise and authority. And here's the other cool thing. What I've found, Charles, is in order for people to invest with you, they need to know you, like you, and trust you, right? Yeah. So when we're focusing on this target group of people that we already have a pre-existing relationship with, 2 out of 3 are taken care of. So just like Meatloaf says, 2 out of 3 ain't bad. They already know us. They already like us. Now we just really have to work on the trust factor, right? Trusting us with their money. So there's all sorts of different ways to do this. And a few easy ways are, when you're meeting with a prospective investor, I suggest you dress business casual, even if they're accustomed to seeing you look a little slobbier. And the reason is it shows them that you're respecting them, because again, you're talking about serious stuff, you're talking about money. And also, even if they give you a little bit of a hard time, it's going to cause them to respect you a little bit more as well. Okay?
Dave, how do you feel about tattoos?
I'm
just kidding. I just was going to kind of put you on the spot there. You never know who you
try to avoid having them on my forehead.
Let me just tell you something, and actually have it right here. These are my notes from the video that I shot this morning for the new program. What I said in this program, my objective for this business building program is to make you the multifamily expert in your marketplace.
Nice.
There's a picture of one of my students standing on a chair in a RIA club teaching multifamily. And if it's him, it can be, if he can do it, there's no reason why anybody else can't do it. And so that is that is exactly what you're talking about here about, having that professional look, be the authority in the room. There's no reason why you can't do that. What you got?
This is the ultimate business card on steroids. It's a book, right?
Yeah.
So when you write a book, you're seen as the authority. That's where the word authority comes from, as being an author.
Yeah.
And if you give somebody, a prospective investor, a copy of your book, they're going to go, holy shit, you wrote a book. And whether they read it or not, doesn't matter. They're never going to throw it away. It's going to be sitting on their bookshelf. It's going to be, in their consciousness, one way or the other. So that's a real shortcut to being seen as an authority, is writing a book. That's for sure. But there's other ways as well. Get interviewed
I just learned something new, which I'm kind of embarrassed about. That I never put author and authority together. I never realized one was the root of the other word. Geez, see, gosh.
There you go. You learn something every day, man.
I'm Canadians, so geez.
Were you the smart ass that called us the 51st state?
That was me. That was me.
On my own podcast,
I told you Maine. I said Maine is Canada's Florida. I said, do you guys still get mad that we would make fun of your money? Yeah, that was me. That was all me. So,
love it. All right. So demonstrating another way to be seen as authority, especially nowadays, you guys, you got to have a website. And I suggest you have a website specifically for communicating with investors, right? Like you might have your own website for the multifamily business, looking for motivated sellers, looking for tenants, what have you. Have a different one, which is where you're communicating with your prospective investors. This, a good website's your kind of your online marketing hub. Everything comes from it. Everything brings people back to it. You control the conversation. I call it, it's our little piece of online real estate that we actually own and control versus Facebook and all this other stuff that we don't. So highly recommend that you have your own website. And then last but not least, once you've got a couple of investors on board.
Hold on. Brendan just asked an interesting question. I want to kind of touch a little bit more on this because part of the new program is going to be, website templates. There's a guy out there. Oh boy, I wish Deb was on the call because she would know exactly. We went down to see him in Orlando. ClickFunnels, Russell Brunson.
Yeah.
Yep. And he, one thing that he said about websites, which absolutely blew me away and made me look at them entirely differently, is that the problem with people's websites are that they are a brick wall, and they hit you hard. You come to them and you stop. And it doesn't. You don't get involved with the website. It doesn't move you along. It doesn't take you somewhere. And so his whole entire focus is each website is designed to take you someplace else and give you more. So when Brendan just asked the question: how do you redirect customers from your marketing website to your investment website? Like for instance, when you set up those 200 people, giving them a couple different website addresses might be kind of tricky. So
I wouldn't. I would only give them one. So okay. I agree with Brunson, but it's slightly different. So again, you guys got to remember, we want to stay under the radar with the Securities Commission, right? That's a big thing. So we're not worried about SEO. We're not worried about driving tons of traffic to this website. This is our little marketing hub for our 200 people, and maybe some of the people that they know as well. But we're keeping it tight. I know it's very counterintuitive compared to what everybody else is talking about the website. So, Brendan, to answer your question, your marketing website's completely separate from your investor website. You're only going to be pushing the folks that you have on your list to your website, and you're going to be keeping the communication tight. Does that make sense?
Yeah.
Yeah. All right. Good question. So then and here's what I'm sure you found this, Charles, but once you've got a couple of investors on board and they've started to see a few checks and and you're doing a good job and they're happy with what you're doing, it is so much easier to get more investors that way because you can get testimonials and you can get referrals. And that's what I call the snowball effect, right? You just get this thing rolling, and that's how you're able to grow things and expand through beyond the people that you know. You start reaching out, you start getting introduced to the people they know. expanding that with network. So that's step number 5, is getting testimonials, especially video testimonials. Video testimonials are gold. So getting testimonials and referrals. And that, in a nutshell, you guys, is the 5-step process. And the whole goal here is to get, so we got that constant communication going out there, and we're getting people to reach out to us. And this is what happened. They put up their hand. So they'll either text you, they'll give you a phone call, they'll email you, they might even send you a social message, what have you, saying, hey, Charles, what's this real estate thing you're doing? What are you up to? I'd like to hear more. And that conversation, my friends, is night and day different from you chasing after somebody trying to convince them to hear about your deal. Get that curiosity, get them to put up their hand.
Okay, now here's where things get tricky, and I want to hear your advice on this. Mm-hmm. The person puts up their hand. Dave, tell me more about the real estate. You give this sales pitch. How do you ask for the money? How do you ask for the order? How do you get them to that final step to know, oh, this guy's got money, I'm ready, he'll invest with me? How do you make it a conversation-like feel instead of being salesy? Because like you said, you don't want to come off salesy. You want to be able to maintain a very nice relationship with these people. How do you do this?
Well, several ways. So the first thing is, by the time they're reaching out to us, if we've done all this stuff right, they're already fairly familiar with what the heck we're doing. Because if you got your website set up the right way, and kind of like Brunson talks about, have a lot of video stuff on there, right? So they get to find out the gist of what you're up to. I'm doing multifamily investing. Here's the market I'm doing it in. Kind of here's what I'm looking for in investor partners. Here's the kind of time frame we're looking at. Here's what the minimum investment is. So that by the time they're actually reaching out to you, most of the time they've got a pretty good idea of what you're up to. And it's not a sneak attack. They know you're looking for investor partners to bring money to the table. So there's no sneak attack there. They know what the presentation's all about. The way I position it is, hey, I'm going to show you what it's all about. And if it's a good fit, great. Jump in, join me. And if not, that's okay too. There's no pressure. And then here's the trick. What I do is I set the stage at the beginning of the presentation, Charles, and I say, so for example, let's say it's you and I. You pull a little Dave Sandler technique there. So you say, at the end of the presentation, one of two things is going to happen. Either we'll go through the whole thing and you'll see it, and for whatever reason, it's not a good fit for you at this time. In which case, Charles, I want you to feel perfectly comfortable letting me know. All right? On the other hand, we will see that it's a good fit, and I'll show you what the next steps are. And don't worry, Charles, I'm not going to ask you to cut me a check today. That's not how it works, but we'll get the ball rolling. But at the end of the presentation, are you comfortable giving me a yes, I'm interested, or no, I'm not interested?
And that's it.
That sets the whole thing up. Then at the end of the presentation, right, I show them what it's all about, answer questions, what have you, and say, hey, so Charles, what is it? You interested in moving forward or not? And I get a commitment right there and then. Now, I'm not asking them to write a check. I'm getting them to sign off on an expression of interest or a letter of intent, might be what it might be called there. And then
we actually have them do accredited investor questionnaire is what we get them, like we onboard them as a potential investor. We have all that paperwork ready to go.
Exactly.
Yeah.
So however you structure your investments, right? But so for me, for friends and family, they don't necessarily need to be an accredited investor because we already got that pre-existing relationship. But I do want them to, even though it's not a legally binding agreement, anytime somebody signs off on something, they just feel more.
They feel like exactly. Yep. It's like almost an implied consent type of sale, where you just kind of get them on board and say, okay, they're in the fold. So,
exactly.
Yeah.
And the other thing is the positioning as well, Charles. It's like, it's not just me desperately seeking their cash. It's me giving them the opportunity to invest with me and get a much better return on their money than pretty much anything else they can do, backed by a solid asset, which is a real piece of property, and somebody taking care of that for them. So it's a completely hands-free investment for them.
Excellent, man. Wow. All right, hey Dave, we got 4 minutes left. Give us your sales pitch. We go to moneypartnerformula.com. And,
No, I don't think so. I think probably there's no sales pitch, you guys. If you'd like.
Oh, and that was the sales pitch. You see how we did that? He's good. He's good.
If you're interested, I got a book called The Money Partner Formula, which I think is actually maybe you can go there, but investortractionbook.com. You can get a free PDF copy of the book, and that is one of Brunson's sites, so that'll show you exactly what Charles was talking about.
Investor Traction
book.com.
Cool.
Yeah.
Cool.
That's a good way to start. If you're interested in having a chat and seeing how this might apply in your business, happy to get on a call with anybody. You can go to bookachatwithdave.com, and we can set up a time and have a little chat and help you get some clarity on what you're looking for when it comes to finding investors and raising capital.
Awesome. Oh yeah, Dave Peters. Dave Peters is using. The thing is that he's. Thanks. Dave Peters is. He's making the statement here, but that's like one of my most favorite lines, where you ask the person, "Do you know anyone who might be interested?" And they come back and say, "Hey, what about me? I might be interested in that." And it just makes it such an easier close because you're not putting the burden on them, especially if they aren't interested. You got to say no. So, hey, awesome stuff. Let me tell you something, Dave. This is right on the money. This is so in line with what we are doing here with the Multifamily Investor Academy. For the rest of this year is, this particular element as far as setting up the systems in order, you call them the formula, setting up these formulas in order to generate these types of, this side of the business. So when you're ready to go, you're ready to go. Because, this is not being taught the way it should be. It's like you said, and I remember I used to say it myself, and I've stopped saying it because I don't believe it to be true anymore. It's like, hey, if you have the deal, the money will come. It's a tough market out there right now. It has to be a smoking hot deal. But go ahead, Dave.
Well, with a caveat, right? Find the deal, the money will come if you've got this set up.
Yeah.
Right? If you've already been communicating with people, if they already know what the hell you're doing, if you got investors in the wings eagerly waiting for your next deal to put their money into, then yes, that works. But you have to have everything set up in the first place.
Exactly. So, all right, his name is Dave Dubeau, moneypartnerformulas.com. And we